Hi everyone, welcome to Digital Expert. Today I have got something super exciting for you. We'll be discussing 5 stocks with massive potential that you can add to your portfolio right now. Whether you are a beginner building a new portfolio with just 5 stocks or already have a solid portfolio, these stocks can be great additions. So these stocks are from 5 different sectors. So there is a good diversification happening here. So this would help reduce the risk and create a more balanced portfolio. So keep watching till the end so you don't miss out on any details on this must-watch stocks. Don't forget to subscribe to this channel and share my videos with your friends and family or anyone who might be interested. So let's get started. Also check out this playlist sector-wise stocks. The first stock is a prominent global infrastructure EPC company. So it operates in several key sectors including power transmission and distribution, railways, civil and urban infrastructure, solar, oil and gas pipelines and cables. The market cap of the stock is 28,081 crores. The stock I am talking about is KEC International. The current price of the stock is 1054 rupees. So KEC International has a robust order book worth 42,500 crores with a significant portion coming from the power transmission and distribution. This company has a geographical reach over 110 countries with a strong presence in India, Middle East, Africa and America. So KEC International has multiple manufacturing facilities for towers and cables, boasting significant production capabilities. The company has also expanded into sectors like hospital, construction and logistics and also has secured new orders in metals and mining, cement and carbon black. Overall, KEC International is well positioned in the infrastructure sector, focusing on sustainable and innovative solutions across various domains. Analysts has given a 48% buy rating for the stock. Price to earnings ratio 66.60, higher than a sector P ratio of 33.35. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 8%. Their annual revenue rose 15.33% compared to their sector average revenue growth of 10.37%. Looking at their annual net profit, which rose about 97% compared to the sector average net profit growth of 33.11%. The future potential of the stock looks really promising. The fundamentals look good for the stock and definitely a stock to keep in your watch list. The next stock is a leading energy and environment solutions company in India. So this stock is at the forefront of revolutionizing how we approach energy, environment and chemical solutions. So this stock is a diverse portfolio spanning boilers, heaters, absorption chillers, power plants and much more. So this stock is a one-stop utility partner to both industrial and commercial segments, helping customers achieve better resource productivity. The market cap of the stock is 54,719 crores. The stock I am talking about is Thermax Limited. The current price of the stock is 4,592 rupees. We can classify the services into 3 sectors: energy solutions, environment solutions and chemical solutions. Looking at the energy solutions division, Thermax offers solutions for process heating, absorption cooling and heating, boilers, heaters and power generations including the solar energy. They specialize in vapor, absorption cooling and heating systems, catering to industrial refrigeration, air conditioning and process cooling and heating needs. Thermax has also expertise in setting up captive power, cogeneration, tri-generation plants on engineering, procurement and construction. So looking at the environment solutions division, Thermax provides air pollution control systems for both particulate and gaseous emissions to industries such as cement, steel, power generation, chemical and fertilizers. They also offer water and wastewater solutions including water treatment, wastewater treatment, zero liquid discharge solutions, sewage treatment, recycling and desalination plants. Looking at their chemical solutions division, the Thermax manufactures and markets a variety of specialty chemicals aimed at improving the process across different sectors. So these chemicals include microporous resins, performance chemicals, paper chemicals, construction chemicals and oil field chemicals. The Thermax is also trying to lead the charge in renewable energy sector. Analyst has given a 36% buy rating for the stock. Price to earnings ratio is 73.79, higher than the sector P ratio 50.29. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 13.96%. The annual revenue rose 15.83% compared to the sector average revenue growth of 10.37%. Their annual net profit rose 43.3%. compared to the sector average net profit growth of 33.11%. The future potential of the stock looks really promising. The fundamentals look good for the stock and definitely a stock to keep in your watch list. The next stock is from the FMCG sector. So this company is primarily engaged in milling, processing and marketing of branded and non-branded basmati rice as well as manufacturing of rice food products for domestic and international markets. They also focus on research and development to enhance the value of rice and rice food products. They own several rice brands including Dawat, Royal, Heritage, Gold Sale Indus Valley and 817 Elephant. Their flagship brands Dawat and Royal hold significant market shares in India and North America. The market cap of the stock is 13,776 crores. The stock I am talking about is LT Foods. The current price of the stock is 396 rupees. So LT Foods continuously expands its product portfolio. For instance, they have launched the Dawat cooking red rice and introduced a new Royal RTH variant. The revenue primarily comes from basmati and other specialty rice with organic food and ingredients, convenience and health and other segments contributing smaller percentages. They have a diverse market presence with significant shares in USA, India, Europe, Middle East and other regions. They export to over 78 countries. They have a robust distribution network spanning various channels including general trade, modern trade and e-commerce with a widespread presence in India and international markets. The price to earnings ratio is 22.90, lower than a sector P ratio 54.78. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 16.4%. Their annual revenue rose 12.08% compared to their sector average revenue growth of 2.89%. Their annual net profit rose 47.36% compared to the sector average net profit growth of 7%. The future potential of the stocks looks really promising. The fundamentals also look good for the stock and definitely a stock to keep in your watch list. The next stock we are going to discuss has a big role in the power sector. So this stock is primarily engaged in the business of manufacturing transformers. This company plays a major role in the electrical infrastructure industry by providing essential components for various applications. The market cap of the stock is 6,414 crores. The stock I am talking about is Silchar Technologies. The current price of the stock is 8,410 rupees. The international power transformer industry is projected to grow at a rate of 7.1% over the next 7 years to become 38.91 billion in value by 2030. So various factors including technical developments and a rise in power consumption across the world will drive the demand for the power transformers. So this stock is a direct beneficiary of the growing demand of power. So this company manufactures a wide range of transformers including distribution transformers, power transformers, catering to various industries such as utility, renewable energy, cement, sugar, steel and hydrocarbon. The diversification in their business reduces their dependency on specific sectors and enhances their resilience. The company offers international quality transformers at a price that justifies the performance of the products. So Silchar has successfully expanded its market reach internationally, with over 40% of its revenue coming from exports. It serves customers in the USA, Canada, Middle East and African countries. The top 5 domestic customers contribute approximately 54% of the domestic sales. This company's advanced facilities and competitive pricing ensure their position as a world-class manufacturer of transformers. So this stock also serves renewable energy sectors like solar, wind and hydel. The overall outlook for the transformer sector looks strong due to the government push towards installation of green and efficient power generation systems. Price to earnings ratio is 59.49, lower than a sector P ratio of 102.83. Debt to equity ratio is 0 as the company is debt free. Return on equity for the last financial year was 41.99%. The annual revenue rose 42.1% compared to the sector average revenue growth of 16.16%. Their annual net profit rose 113.09% compared to the sector's average net profit growth of 22.7%. The future potential of the stock looks really promising. The fundamentals look good for the stock and definitely a stock to keep in the watch list. The next stock is a machine manufacturing company. They specialize in manufacturing computerized, numerically controlled and lathe machines. So this stock has a significant market presence with sales and service operations in 39 cities, supported by 143 qualified engineers and 9 business associates. They also have 5 technical centers to enhance the customer support. The company serves a wide range of clients across various industries. The market cap of the stock is 1,423 crores. The stock I am talking about is Mac Power CNC machines. The current price of the stock is 1,422 rupees. The company offers a diverse product range with 27 segments, including turning centers, twin spindle turning centers, VMCs, and turn mill centers, totaling over 315 variants. The Nexa group within the company focuses on the sales and marketing of high-value machines such as vertical turning lathes, horizontal machining centers, and automated VMCs. In the defense sector, the clients include DRDO and Indian Outface factories. Public sector units like ISRO and Rail are also part of the clientele, along with agriculture companies such as Smitter Fasteners and Rinex Engineering, and die mold firms like Plasma Alloys and Access Tools. In the capital goods sector, they work with companies like Graphite India and Concranes. So, Mac Power's manufacturing facility, located in Gujarat, spans across 8 acres and currently produces 1,500 machines annually. So, one of Mac Power's competitive advantage is its status as the lowest cost producer in the industry, coupled with high EBITDA and PAT margins. They also boast the widest range of machines offerings compared to the competitors. Mac Power has significantly increased its focus in the defense and aerospace sectors, supplying over 200 machines to various defense factories. Price to earnings ratio 50.18, lower than the sector P ratio of 65.7. Debt to equity ratio is lower than 1. Return on equity for the last financial year was 21.5%. The company has shown a good profit growth of 51.01% in the past 3 years. The company has also shown a good revenue growth of 28.77% for the past 3 years. And the company has also significantly decreased its debt. The fundamentals look good for the stock and definitely a stock to keep in your watch list. If you like this video, don't forget to subscribe to this channel, and thank you for watching.